on Wall Street. Joining me now is Tony Drake, CEO of the full-service financial firm Drake and Associates. Tony, thanks so much for joining it today. What do investors need to know about this stock market?
Well, quite the day today, and I think there was so much fear over the last week or so with everything happening in the banking industry. I think it was pretty expected that we're going to see a strong rally. I think we may see that again in the next day or two. You know, if you think about maybe if someone's from the northern part of the country, you accidentally turn the thermostat up to 90 degrees, you get home, it's too hot. It's going to take a while to get back down to 70. It doesn't happen right away, and that's what we're experiencing. I think the Feds were so late to the game, you know, that we really are in a position where we over-tightened. That consensus has really come in somewhere between 0 and 25 basis points tomorrow. I really think they should do 0. Their job is to raise those rates till something breaks. Clearly, some things have broken in the last week, but, you know, they may stick to that 25 basis points to make a statement about their credibility. So I think tomorrow will tell us a lot about what they're thinking and where we're going.
So how should investors position themselves, Tony, with that in mind? And again, traders via this CME FedWatch tool pricing in a more than 80% chance that we do get a quarter percentage point rate hike tomorrow, even amid these two banking collapses that we've seen, SVB and the closure of Signature Bank. Should investors buy, hold, or sell?
I think it really depends on time horizon. A large portion of our clientele are retirees or people nearing retirement. That's going to be a stage of life where we want to get a little bit more conservative. If your time horizon is with you, though, there's some great opportunities. I think some areas in the banking industry, some people have gotten kind of thrown out with the bathwater, and they're great companies. Those could be some great opportunities to rebound. I think there's still some excellent opportunities when you think about infrastructure spending. That hasn't gotten a lot of attention lately, but that spending is going to start up here in 2023, and there's some companies that could be poised to have some nice gains throughout the year.
Okay, nice gains. What are some of those companies, Tony, that you like at these levels?
Well, compliance, we can't discuss specific companies, but we really like some of the manufacturers of large equipment. You know, they are really poised and they're going to be in big demand. And those are some pieces of equipment that are really going to be needed in this infrastructure spending. I think there's some great opportunities. If you look at the bank sector, there's some particular bank names that have really gotten beat up, but they have a much better exposure. If you think about SVB, really exposed to the technology sector, which we know has really gotten beat up over the last 12 to 15 months. A lot of these other banks have much better exposure, wider diversification of clientele. Things are in a much better position with their bond portfolios, but their stocks have taken a hit. So those might be some great opportunities as well.
What about the NASDAQ? Yesterday, I guess, might have been the exception, Tony, but the NASDAQ clearly outperforming these technology names. The NASDAQ doesn't have nearly as much exposure to the banking industry as the S&P and the Dow. Do you expect that momentum in the NASDAQ to continue, the outperformance that is?
I do, especially in the short term. I think if the sense is that Jerome Powell is either going to slow or pause, you know, I'm thinking we may even see cuts this summer if things continue to trend the way that they are. That's going to be great for those technology companies. So we're seeing some nice rallies in there. I think any of these time periods, if you think over the last year where we've anticipated a pause or a reduction in the increase in rates, that's where we've really seen some of those technology names and the NASDAQ outperform.
Okay, good to know. Tony, of course, the Fed chair has a lot to manage tomorrow when it gives this press conference following its 2 p.m. Eastern decision. What do you want to hear from Fed Chair Jerome Powell tomorrow, and how would that set the course for your investments?
I really want to see him pause. I mean, they've clearly overdone it. I think if they give us a 25 basis points raised, they're really making a statement about that credibility, but that would be a big policy error. You know, we do see core inflation accelerating a little bit, but in most parts, that inflation has started to turn. They really need to separate these two issues, stabilization of the bank sector and monetary policy. I think if you continue to commingle these, you're going to have issues, but I'm more concerned about the stability of the banking industry. For me, that calls for a pause in rate rises. Let's let this settle out, bring back some stability and confidence to that market, and then we can address if inflation continues to rise, whether we still need some of those 25 to 50 basis point increases.
All right, Tony Drake, CEO of Drake and Associates. Tony, thanks so much for coming on the show.